Hi, everybody. Welcome back to our YouTube channel, Fast CPA and Consultants. I'm here with our CPA, Fulton Abraham Sanchez. Welcome, Fulton.
Thank you.
If you're watching us for the first time, remember that we started this section called Tax Talks a few months ago where you send us your questions and we respond to them through these videos. And today we'll talk about tax tips for LLCs in USA. So the first question we have is, what is the difference between a one owner or a two owner LLC?
Okay. The one owner LLC for the courts in the USA, for the legal system in the USA and the IRS, it is a disregarded entity. It means that it is not considered an entity by the IRS or by the courts, by the court system. Because one person and with an LLC or an LLC with one member doesn't give you or doesn't give to that member the protection of the limited liability.
Okay.
It requires two members for the provision of the limited liability protection in a company that, designated as an LLC. That is the main difference. The second difference is that the LLC with one owner, the company does not have to report separately from the owner. It is the owner who reports within the personal tax return. In exchange, when the LLC is two owners, there is a separate report, and once the separate report is filed, the IRS, the company or the LLC needs to provide to the owners, two owners or more owners, the information of that filing for the owners to file a tax return personally.
Hmm.
The two main difference is that one is a disregarded entity, one owner, one LLC, one owner is a disregarded entity. Second, the tax filing is in charge of the owner of the LLC when there is one single owner.
Okay.
The LLC with two or more owners needs to report separately, and it's considered a separate entity, and therefore there is the limited liability protection.
Okay, understood. So, can the members of the LLC be members of the same family?
Yes, that's not a problem.
Okay, can I put personal expenses in the LLC's tax report?
No, you cannot, because the expenses that are allowed, or the IRS allows these expenses, the expenses are or must be directly related to the creation of the income. For example, if you invest, if you have a business, any type of business, and to produce the income for that business, you need to incur expenses in renting a place, paying the utilities. For the provision of that income, for the creation of that income, those expenses are allowable or allowed. If, for example, if you travel to Europe and you want to deduct those expenses and they are not related to the creation of the income, then no, you cannot discount or you cannot expense out those the trip to Europe.
Okay. Um, is there a tax difference between large and small LLCs depending on how many people you hire?
The size of a small or large LLC depends of the revenues of the sales of the LLC. So, for example, a small LLC in terms of hiring, uh, it will the small LLC and the large LLC they will be obligated to pay, for example, the payroll taxes, regardless if it's a small LLC or a large LLC. If you hire one person of 100 people, they are both required to pay tax payroll taxes and report those payroll taxes to the IRS. And the difference between a small LLC and a large LLC, depending on how many people they are, is the the amount or the number of obligations in terms of a payroll tax that they might have. If you have only one employee, you have just one obligation to report to IRS in terms of taxes. If you have many employees, you will probably need, um, first of all, a human resource manager, and second, you will need a payroll company that provides you the service for filing of the payroll and payroll taxes and payroll forms every quarter and at the end of the year. So those are the basic difference.
All right. And last question is, if there's an LLC with multiple owners and one is in the US and the other people are living in another country and they buy a property, are the assets paying in the US?
Other people living in another country, yes, the income that the income that you receive in other countries, and you are a U.S. citizen, that income needs to be reported in the U.S. because the U.S. has this requirement of worldwide income taxation. So any income that you earn, and you are a U.S. citizen, any income that you earn in the world is reportable to the IRS, but you can take a tax deduction for the taxes or a tax credit for the taxes that you paid in the foreign country.
Okay, understood. So, okay, everybody, those are all of the questions we have for today. Thank you, Fulton, for being here. I think we got some really good information. If you have any more questions, do make sure that to contact us through our email or social media, and we'll put the information in the description of the video. Also, don't forget to subscribe. Thank you again, everybody, and we'll see you in the next video.
Thank you.